Good morning, everybody.
Good morning.
Start that. Let's do you two. Could you move to the other room? Okay. Yeah. Pablo, sit down over here. Could everybody introduce themselves for a couple of minutes?
You are? My name's Sean Slows. I'm the CEO of a company called Fundamental Interactions, which builds trading technology for banks, brokers, exchanges, ATSs. We also operate a company called Velocity Ledger, which is an infrastructure company for blockchain, and basically it's getting licenses in Bermuda, new STOs and tokens for issuance.
And your purpose here is what?
Look to invest.
Very good. Enzo.
So
you start by saying I'm an investor.
I'm an investor.
Enzo.
So James Opalani, I work with Michael Turpin at Credit One Group. I also have started a fund called Doors Capital, which is a bridge to STO fund. So I'm basically putting together a group of people that will vet deals and then manage the process to get someone listed as a actual STO. And we are going to use the VL platform. I actually sit on the board of that company also, and by doing so, we'll help them manage through the entire banking process. We're not investment bankers, but we are kind of experienced folks in the small capital markets world. So I'm basically applying the same kind of concept, and I'm here to look at deal flow and try to pick the best ones.
Let's make these just a little bit shorter, please.
Julian Jacobson, investor, what Sean said. So we're partners, he's CEO and Chief Operator.
Dave Brown, we're VCs from Paris, from investor.
I'm not going to take it.
Sure.
Luke.
I'm Luke Kerner with Crypto Oracle, and we're representing.
Dennis Hendricks here with Pulse Lab.
Very good. So Pulse Labs is going to be selecting one of the ICOs that presents today, and they're going to be sharing with that ICO some of their services at a discount rate. We don't call it a prize because it's a discount. Prizes are worth zero, but they're going to be offering that to them. Pablo.
I'm Pablo, I'm with Crypto Oracle, so Lou, we're fishing.
And this fine gentleman, you want to know who you are.
I'm Dr. Alberto Alexander, a private investor with Goldfinger, strategic ICO advisor.
Okay.
David Forzio, a company called Treaty Systems, family office investor.
And your name is?
Victoria.
Victoria.
Daniel Nunez, Cryptus Capital, private investor.
Very good. So we're going to bring in the first investor, the first ICO. They're going to have 25 minutes today, and we'll get this going. Let me just give you a brief introduction as to what we're going to do. We're going to have eight teams coming in, one team per room every 25 minutes. We would ask you to remain in the room. I have asked the ICOs not to go in the hallways, and what happens is that hallway conversations happen, and then the conference starts to happen in the hallways, right? We don't want that to happen. They are going to be recorded and live streamed. We use that as a marketing piece for the ICOs afterwards. We have the privilege today of having an extra 5 minutes, so ask deep questions. We want you guys to really understand what the business model is, what the strengths and weaknesses are. At the end of every presentation, you have a little credit card voting machine here. And this voting machine will allow, the question that we want you to answer is, are you interested in receiving more information about this ICO or not? That's it. There's nothing more than that. We will not be sharing who voted yes, but we will tell them 75% of the room voted yes. But I don't want to share what your personal preferences were. But I want to give them feedback, because sometimes the room says no. And if it's a 20 or 30%, they should also know that their presentation did not make it. Did not even meet that minimum threshold, okay? But we will not be sharing how you vote. Ben, we got you here. Hopefully these $50,000 of services come through so we can get them. But thank you very much for your effort. Thank you for being here. We got some cocktails at 4 o'clock. So with that, we'll bring them in. The first presenter is going to be Blue. Wait, Lou, give me 1 second. I want to get his presentation up and running. We're going to switch.
Let me try the first polling system.
Okay, actually, yeah, let's do a dry run of the polling system. You ready?
Yes.
Okay, everybody, pick your machines and vote. We get to see, starting with position number 1, we get to see how the vote happened. So there's number 1, 15. So we know, there you go. The color doesn't mean anything. The color just means you voted. That's all it means. 5, they're empty, that's why. Okay, we're good to go. That's fine. So let's get the presentation. And without further ado, it's my privilege to introduce Lou Kerner. This guy has been in the business. He is a leader in the industry. He has, he goes by the pseudonym of Crypto Oracle. Correct?
What's the name of the company?
There you go. I think we call you Crypto Oracle. And has a bunch of stuff in the space. And, you know, I don't need to introduce you further.
Okay.
The floor is yours.
Appreciate it.
Here we go.
Okay, there we go. Okay, thanks a lot for having us and for having everybody here today. It's a great event you guys put on for the industry. As you said, I'm Lou Kerner. I'm co-founder of Crypto Oracle. And real quick, by way of background, because I think it's helpful to understand, I started my career as an equity analyst on Wall Street. I then ran a couple digital companies. The first called .tv, which was started out of Idea Lab, the world's first internet incubator. And the second company I ran was called Bolt. We were the largest social network before MySpace, peaking at about 23 million kids. I then started angel investing, started my first fund in 2012. In 2015, I joined a company called Flight Ventures, where I focused a decentralized VC on investing in tech companies founded by Israelis. And, you know, like everybody else who's here, who's seen the crypto light, we all have our stories of, you know, when we saw crypto. And I think that's helpful to know first. That's helpful to know also. And I first looked at Bitcoin in 2013, 2014. I joked long enough that the Wall Street Journal wrote a story on Bitcoin, quoting me as Wall Street's Bitcoin expert in 2013. And I joked that I looked at the light and I looked at the light, but I did not see it. It was dimmer in 2013, 14. It's a lot brighter today, still very hard, I think, for most people to see. And it wasn't until 2017 that, kind of June 2017, when ICOs were going crazy, and I held a conference call. I've done over 50 of these over the last 8 years, where I got 4 experts together to talk about ICOs, teach me. I had a couple hundred other people on the conference call, and it was literally on that call something Olaf Carlson, we said, that literally, you know, it's called now Gestalt shift, where one moment you see the world as one thing, you get new information, you see it as something else. I saw the crypto light, I stopped everything I was doing, and I started, there's a great William Faulkner quote, which is, I don't know what I think of anything until I read what I've written about it. And so I started feverishly writing in a manic state for about 3 months, and then I got all my thoughts together. I wrote a post called 7 Thoughts on Crypto after 3 months down the rabbit hole. That was my first post. That was #1 on Medium, the most read crypto piece on Medium for 3 days. And after those 3 days in October, I was the 3rd most influential crypto blogger in the world, which made me a guy in crypto. And it's been an amazing year since. It was that same month that I met James Haft, who I 2 months later co-founded Crypto Oracle with. And you know, our mission at Crypto Oracle is to build communities to create value. You know, when we talk about crypto, we see crypto as a new computing platform. We believe that, you know, the technologies of blockchain, cryptocurrency, smart contracts, and zero knowledge proof, in combination, are enabling new business processes that were never possible before. And we think that more value is going to be created, more disruption is going to happen in the next 20 years from this new computing platform that's happened over the internet over the last 20 years, because every new computing platform is bigger than everything that came before it. And we think that the biggest difference between crypto and everything that came before it is community, because it's you know, not just your developers, it's your investors, it's your hodlers, it's your customers, it's your vendors. We now have tools to incentivize everybody in your community to act in ways that benefit the broader community. And so we focus on building, supporting, and educating the community, because we believe it as a company that if we do that and we do that well, we'll both help the industry and we'll build an industry-leading brand. And so that's what we've been doing for the last year. Here's part of the community building we've done. As an example, Crypto Invest Summit is a co-hosted conference in Los Angeles last month. 6,200 people. It was awesome, and that helps us help the companies in our community that we're working with. We can get them up in front of a crowd, in front of thousands of people. That's huge value add for the companies that we're working with, investing in. And we're most well known for Crypto Mondays, which is a crypto meetup we started in January in New York. And now we're over 11,500 people. It's the largest crypto meetup in the world, 40 cities. Crypto Mondays. Have you guys been to Crypto Mondays Paris? What?
We couldn't.
You couldn't. Okay. Well, Crypto Mondays Paris rocks, and it's a great example. I'll get to it later. How Crypto Monday Paris is now helping Crypto Oracle in several ways, and what our company does, leveraging this community. Everything we do, we look through the filter of community, and so we describe ourselves as a community first. Crypto VC accelerator and incubator. On the VC front, we're in the process of raising a $25 million fund. We raised a small amount earlier in the year, started making some investments, and one of the things we like to point to is the first investment we made was in Hashgraph. And Hashgraph was an intensely hot deal at the time in January of earlier this year, and there was a line around the block to invest. And they enabled Crypto Oracle to invest because the first time they talked publicly was at a governance and consensus meetup that we hold. And so they really appreciated that opportunity. And so again, it's how community builds value both for the community and for Crypto Oracle. And we really believe, the macro lesson I've learned as a VC now for the last 6 years is that, most companies start off and nobody knows if they're going to be successful, if maybe except their mom. And they go forward and, they beg VCs for money. It's really hard for every company. And then one day something happens and now everybody knows that this is the next Google or Facebook, and now the VCs are begging them to get involved. And so what we've tried to do at Crypto Oracle is build a brand such that when we call the same companies, like a Hashgraph that everybody else is calling, we'll be able to get involved our fair share of the time. And one of the things that this brand does, this community building, is it makes us a great partner for people who want to get into crypto. So as soon as we close the fund, raise the money for the fund, we're going to start in partnership with an unnamed company, but they're one of the hottest venture debt companies to have started over the last 10 years. We're going to raise $100 million crypto debt fund. And this is simply the same kind of VC debt that this company has been doing for the last 10 years, but now they'll do it for crypto companies. We think that this can be a huge business. Crypto companies are have trouble in most countries around the world opening up a bank account, let alone getting venture debt. So we think this is going to be a big business. We also have an advisory business that we think really helps us understand the industry deeper. We have a few verticals that we're very deep in, including healthcare. Dr. Alex Kahana, who runs our healthcare practice, is actually today running a blockchain day for the Minister of Health in Switzerland. So, again, Alex is out there spreading the good word about Crypto Oracle and helping build the brand, and really he's helping make the world a better place through the work that he's doing. Pulse Labs, we're also an investor in Pulse Labs and work closely with them, and we think there are lots of advantages to us and to Pulse from that relationship. And on the incubator side, the business that's farthest along is Crypto Commons. So Crypto Commons is a crypto shared workspace. Here in New York, we're on 39th and between 5th and 6th. And we really think that anybody who's in crypto should be surrounded by other people in crypto 24/7. WeWork's a great company, an Israeli company, they're great guys, but if you're a crypto company, you should be, whether it's Crypto Commons or another crypto shared workspaces, and there are others starting to pop up around the world, you should spend your time, you should office at a crypto shared workspace.
What's the address, please?
It's 25 West 39th, in between 5th and 6th, 10th floor. We have 11,000 square feet. It's awesome. It's also a home away from home for people in crypto. When they come to New York, if they need a desk, they're always welcome at Crypto Commons. And we're growing Crypto Commons as a decentralized community in the same way that we grew Crypto Mondays. So we run the Crypto Monday here in New York, and in the 40 other cities where there are Crypto Mondays, it's run by the people in that city who know that city better than us and are able to give that city a great Crypto Monday experience for what works in that city. And so Crypto Mondays, again, is going to grow as a decentralized community. We have our first 3 partners, which will be opening up in January. There will be in Crypto Commons Dallas, Crypto Commons Paris in F Station, and Crypto Commons Berlin. And we think this is a great standalone business. We're in the process right now of doing a raise at a $20 million valuation for Crypto Commons. We think that's going to be a great business. And we've got a great team. Pablo's here, and Karen got sent to the other room. James, my partner, also has a deep background in.
They needed people over. I didn't
That's
stand
fine.
here. It didn't sound good.
James, my partner's got a deep background in banking. He's been in tech for the last 20 years as well. He started he was a co-founder of the largest accelerator in South America, NXTP. And we built a great team. Actually, Pablo came. We had 12 interns, a small company. But again, we're really into helping the community. We had 12 interns at Crypto Oracle this summer, including Pablo, who's now a full-time employee. We've got a great group of advisors, partners, and for crypto, for the parent, we're raising $10 million at a $30 million valuation. And we're kind of looking at Crypto Commons at 20. It's a wholly owned subsidiary, and so kind of everything else we're getting for 10, which we think is a great value that includes all the businesses that we talked about and all the businesses that are to come. We think that, as I said before, that this is the biggest thing to happen in the history of humanity, and we couldn't be more excited to be a part of it and to help the community achieve what we really think it has the potential of achieving over the next 20 years. So I saved a lot of time at the end for questions if there were any, but that's it.
Questions?
What's the name and symbol of the token that you preserve?
So we're actually raising equity.
Equity.
Yeah, so 10 million.
An option to convert?
Well, our belief is we're huge believers in security tokens, and we've done a lot of work to actually tokenize the fund. We don't believe the markets are really there today. I mean, if we issue a token, we want a token to trade. And right now as a VC, it's very difficult to have a token trade. We think this is coming in 2019. Our plan is to tokenize the parent as well as the fund.
There's a high level of confidence Coinbase and T0 will be very successful. So you could possibly negotiate a convertible into a token later?
You can, and we've looked at all kinds of different structures. We're trying to keep it simple. We're trying to keep it kind of plain vanilla. It's equity. Everybody understands equity. Nobody understands tokens yet. I mean, the truth is, it's you can round it to zero. We really think it's going to be, we wrote a blog post that was #1 on for a couple of days, titled "The Coming Security Token Tsunami." We're big believers in it, but it's just not quite here yet in our view, in a way that we want to go out and to trade.
So does this actual kind of valuation include the Commons valuation?
Well, correct. So it's $30 million. So you get Commons, which is a $20 million valuation.
So then you're kind of valuing the Oracle piece as $10 million.
As everything else.
Okay. And then
that's certainly one way to look at it. Yeah.
An actual forecast. I mean, I know you're an equity analyst, so you might have
sure.
a forecast.
Yeah, so we've got very deep forecasts about Crypto Commons and the side of the business that we think that can be. I mean, and not only do we think it can be a very big business, we're forecasting to grow at half the pace that we've grown Crypto Mondays at, because there's no commercial agreement in Crypto Mondays.
Right.
There is in Crypto Commons, but we're seeing phenomenal response when we're reaching out. We could have signed up a lot more, I think, than 3 cities if we wanted to. We're starting with 3. We're partnering with Meridio, which is a consensus company. They're actually building a back end for shared workspaces to rent by the day, week, month, and so we'll be one of the first people to be using that platform. We're very excited about it, but we want to get 3 on there first and work out any kinks before we expand it beyond that.
Where do you see the largest opportunities in the next 2 years? I mean, what's the investment thesis? What do you like, and what do you avoid?
Sure. So we're very big believers in infrastructure. I think most VCs today are really focused on building the pipes and the tools that we're going to need to build everything else. And the piece that I wrote, 7 Thoughts on Crypto, after 3 months down the rabbit hole, it's been more than a year now. But the first thing that I said, that I learned is nobody knows anything. That's where we are. We're in the very beginning of this brand new industry, and nobody knows what's going to win. The only thing I'm certain about is whatever it's going to be is something different than what anybody thinks it's going to be. And so,
Repeat that slowly. Repeat that one more time.
That whatever it's going to be
Yeah.
is different than what anybody thinks it's going to be, right? 20 years ago, nobody was saying, Google's going to happen, and Facebook is going to happen, and AWS is going to happen, right? You can't know this, right? So nobody knows where crypto is going, other than I think in 20 years, it's going to be, massive, massive value creation. And as an investor, there's a science behind this, the power law of VC investing, which is you make a lot of investments across the best companies that you can get access to. And that's how you optimize the chances of getting the Googles and Facebooks of crypto.
Cover all losers.
Exactly. Well said.
And what's your investment size?
We won't have any single investment be more than 10% of the fund. So at a $25 million fund, our biggest investment would be $2.5 million. We'd expect the average investment to be $1.5 million out of that fund.
And what's the organization within the fund that is going to do this analysis, engagement, follow-up? I mean, how many people would you consider?
So today full-time at Crypto Oracle, we have 5 full-time employees, 2 venture partners who work full-time with us, and as we raise the capital, we'll continue to build out the team. What's great, as we were talking about this before, is all the data that you have. And so, we're very big believers in leveraging data, not only publicly available data, but, we're creating data ourselves and leveraging different partnerships. The one that we're most excited about probably is a company called Angel, AINGEL. And these guys have built, in VC, when I went around in 2012 and talked to 12 VCs and said, I'm going to be opening up a fund, what can you teach me? All of them said, it's all about the management. Okay, well, unless you think, it's all about the team. Unless you think you have an advantage and you're everybody else at meeting a team and going, hey, these guys are good, what do you do with that? As a VC, my biggest investment was in a team that had previously worked for me, and I knew them to be rock stars. That's the only time in my previous fund that I leveraged that fact. But with Angel, what they do is they have a machine learning AI on evaluating startup teams. And they're going crazy in the Valley over it because everybody else in the Valley knows that it's about management, and they don't know what a good management team is. And so we're working with Angel to evaluate teams now in the crypto world, which nobody is doing yet. And so it's about, in our view, it's about finding great teams, leveraging AI to know what the great teams are who are going after, who can become those $1 billion, $10 billion, $100 billion companies. That's where the returns are made in VC.
What's your fee structure?
This is just a normal 2 and 20 fund.
Hurdles?
No hurdles.
Rob Cullen, I'm a member of the Street Private Investors.
Hey, Rob.
Can you speak a little bit about this venture debt strategy? To what extent are you able to get security and maybe even personal type of pledges or collateral negotiation on that?
Sure. So it's important. What these guys are doing, they're not loaning against crypto, right? They're loaning against businesses. We got this idea because there was a great company in Israel called CoinMama, rapidly growing, the Coinbase of Israel. They have a rapidly growing global business, but they have a cash flow problem that people buy the coins with a credit card, and so they immediately give them the coins, but they don't get paid by the credit card for 3 or 5 days, so they constantly have to throttle back growth, because so that's a great candidate for venture debt, right? They know that MasterCard, Visa, American Express is going to be sending this company money in 3 or 5 days. And so that's a great, and those are the types of businesses that we'll be funding, and these guys, have not had a single loss, and it's a great business. It's it has a higher return than over time venture debt than venture does. It's got a lot lower volatility though. You don't have the extreme outliers.
So you're going to have the security of that MasterCard receivable.
Exactly. So this is venture debt. They're going to run the business. We're going to bring the funnel of businesses to them, and then they are going to do what they, that's what we do. So we're going to leverage our brand, leverage our community to bring them the companies, and then they're going to do what they do, which is understand what companies to loan to, and and how to make a lot of money doing it. They've had phenomenal high double teen returns for the last number of years. So it's a great business. Okay, terrific. Thank you.
Well, thank you very much. Thanks. So, now we need some feedback. We need some voting for you. Okay, vote number 2, number 3. Number 2, number 3, number 4. Good. Okay. Lou, thank you very much. We'll bring in the next team. Okay. So, yeah, let me do some prep here. This. Okay. We have Usha and Rakesh, who's going to be presenting today. They had come from a company called Mulicoin, right? And they are building a digital platform for the startup ecosystem. And it is the introduction is worth 2 minutes. I won't take that time from you, but stand over here so you get on the live stream, and you got 25 minutes.
Thank you.
Good morning,
Good morning.
ladies and gentlemen. I'm Usha. I'm the CEO and the co-founder of Mulia. This is Rakesh. He's the executive chairman and the founder. So, like the slide says, this is the world's first digital startup ecosystem. So, we are a patent pending process, and we are live since Jan 2018. So our global operations and the crypto operations are operating out of Estonia.
Our concept is a little difficult to explain in about 25 minutes, but we have tried to put in everything pictorially. So what we would request is asking questions at the end of these slides so that we don't lose the flow. Is that okay with you all?
Yes, sounds great.
Perfect. So we are the world's first digital ecosystem, startup ecosystem, where we're trying to converge and bring all these 6 community players online. We have competition in silos, with investors and all that on a platform, but not all of them on one single platform. So that's what is Mulia. Mulia is a Sanskritized name for something of value, and it also means money, Mona, a slight difference in that. Go to the next slide.
You have it. I'm sorry. I didn't get a picture. Sorry. There you go.
So this basically explains what is Mulia. We have had to work on this for long. It's a difficult message, but we are trying to achieve it in a couple of lines. It's a culmination of an interaction network, a marketplace, and an on-demand service platform. We bring all of these online. We have workflows, processes, and all that combined to offer very difficult concepts of incubation, acceleration, presented as a digital process. We can see the demo in the platform as we go. So we are the world's first addressed only towards the startup ecosystem. Can I play a video? There's a video.
Yes, sure.
Yeah.
Play a video.
So this basically makes it a little easier. You can click on it. So this explains what exactly we're trying to achieve.
Yeah, you sent us a PDF, so it's not an active link. Let's see. Is there,
You just- you can-
is there on YouTube?
Yeah, you can just go to YouTube and search
Okay,
for
well,
Mulia.
yeah. Give us a second. We'll get it for you.
Sure.
We have time. And the name that you want us to type in there?
What is Mulia? You can just search for Mulia or Mulia coin. Yeah, probably that.
That one?
Yeah.
Okay, great.
What is Mulia? Mulia is the world's first digital startup ecosystem, which replicates the global offline startup ecosystems and provides its members, such as ideators, startups, investors, companies, service providers, and institutions with digital avatars. Mulia was ideated by our founder out of his learnings as a startup entrepreneur in India and the travails and pangs he faced in the process. It is our effort on Mulia to help its global users focus on their core business aspects and use the digital workflows and services on Mulia for activities such as raising investments and getting their operations serviced. Why was Mulia built as a platform? Research has proven that platforms have a long-lasting and competitive advantage in business, and they weather market forces and over time. A platform expands the benefits which the users can derive from a product or services. Its users get the benefit of a broader set of features, and the online partners will be able to leverage the platform to discover, reach, and service more users. They thus focus on their core needs and get a better business solution or offer for themselves. Building a platform also has a network effect with exponential benefits. For example, using a patent-pending global interaction framework, Mulia will offer a process of digitizing the bourse and trading operations of global offline startup ecosystems. This will then let users find infinite possibilities and realize their moolah. If you are a global investor, startup, service provider, ideator, institution, or a company, register with us at www.mulia.global.
So that's best told by the video. It's fast, doesn't stop, and our business model is very simple. It relies on Metcalfe's law of critical masses and network effect. We believe that until we reach the critical mass by aggregation and convergence, the network effect doesn't show in. It relies on the two-sided network theory. We can discuss that in the question and answer session. The revenue model is simple: freemium, platforms, transaction fee, subscriptions, and premium services. And we also have a very interesting incubation coin, which we haven't touched the coin part yet. So incubation coin, which can be presented to all the investors. So coming to operations, the platform is already live. We have spent a lot of time and effort and resources in making the product live. So we are one of the first reverse ICOs in the world. We offer two unique tokens. There's a utility token called Mulia coin, which is for ecosystem transactions at a global level. And then there's a incubation coin for investments and incubation conducted on a blockchain called IncuCoin. Both of them are registered out of Estonia, which is our gateway to the Europe. These are some aspects of blockchaining our various operations. I will discuss this as we go ahead. We have automated smart contracts. We use our own KYC on blockchain. We use synced calendar, global calendar for all the various users. We have on-platform analytics. We have our own blockchain offering in the works. We are multi-user, so you could be a startup in one chapter and a service provider in the other without changing the user profiles. We let users share the digital. There's a digital library called Vault. And then there's also an on-blockchain social platform, which is probably a very nice engagement for the investors. Think of it as a social investment platform for investors. There are many, but we could put only on this. But what's the coin for? That was about Mulia.global, the platform, before we went into the crypto operations. The coin is the crypto part of it. The first coin is the transaction coin for the platform. It's a preferred mode of operation on the platform. It is universal and borderless currency for all the ecosystem players. It's trackable, it's safe within the system, highly portable inside and outside, which is one of the very important aspects when you do cross-border transactions. No inflation effect, instant liquidity, fast, more value for increased usage because it's preferred, and of course increased purchasing power. And that is how the product looks like. So So if you are a user, you could use maps, just zoom in, zoom out, get to the user's profile, see what they do. If they are an investor, you can interact with them. If they are a startup, you could offer services. It's very engaging. It's very engaging.
Quick question on that.
Sure.
That page. Help me just make this slide or what have you. Symbol-wise, what are the red pentagon stand for?
The red hexagons, they are hexagons. They stand for basically, they're clustered. When you put in too many users, hundreds of users on a map, it becomes cluttered. So what we have done is we have clustered. This says there are, this is a console of a admin screen, which basically says there are 4 clustered entities in there. You explore that. It could be a service provider, it could be an investor. Each one has an avatar. So when you click on it, you would know, you would engage with them. So we thought, presenting the interface, the UX has been designed in such a way that it is all map-ridden point of interest, because that's what most people understand. There's no learning to the product.
So I see the concentration spreading out around Africa, then Southeast Asia. So you're saying in the U.S. that doesn't.
Well, when we started, this was an admin console. When we designed this is how it looked. Doesn't mean that US doesn't have clusters. It's just what we have enabled on the system. Our operation started in the Asian region, so it's more clustered there. Okay. Now this is the second coin we have. This is a coin for the startup incubation, and we have a tagline that says "Incubation Made Popular." It's called InQ coin, incubation coin, and it brings in 2 concepts: the coin for investors and also an incubation card. The card is very engaging. But this is what it offers. It's when an investor invests in the InQ coin, they give you a card, a blockchain card which has a component of fiat, service tokens, Mulia coin components to conduct on Mulia coin. There's a debt portion of it. There's a governance we are bringing for incubation, and also processes. So we are trying to workflow all of these frequently used interactions so that the incubation can happen faster and better. We have a couple of patents pending. This is a screenshot of it. This is how our senior team works. We all are incubators ourselves. We have invested a lot of in lots of companies. We realize that there is nothing that is presently available for traditional investors to actually do incubation and monitor them. So our experience comes from here. We have a very large team. I could only put a couple of them on the slides. Our crypto abilities are also very high. We advise a lot of companies on crypto operations. We help businesses achieve tokenization. We tell them how to achieve the crypto operations. So this is our crypto ability skills. We incidentally have the highest KYC passed crypto team on ICO bench. Nobody has touched us till now. I don't know why.
What does that mean though?
It shows reliance. It shows that they are authentic. ICO bench is all about assessments and authenticity and all that.
Okay.
This is our advisory board. The advisory board is it's a global one. We have some of the very prominent guys on our board. Mr. Moore is an ex-institutional banker, managing director of Goldman Sachs in Tokyo and London. So he has been on our board. And then all of these gentlemen, they have actually tied up with us because of the interest and the possibility they saw on our product and concepts. None of them are paid. Current progress right now, the platform has dual coins, as I said. Mulia coin is the first one. We started in July of 2018. It's all in-house conducted. We didn't rely on anyone. The soft cap was 3 million, hard cap 25. We raised about 7 million USD, even though the market was very difficult. We went for some very high quality swaps. We are open with our that concept. It's okay. But if there is some good swap, why not? There are lots of partnerships we built, and that takes our product, adoption a little faster. The InQcoin, the STO filing is in the works. It's in Estonia. We are signed up as a small fund operator, so we would be a digital VC in Estonia entering into Europe. That would probably see we would get the approval in December 2018. The operations would start January 2019, and then the integration with the platform would happen in March 2019. So very unique, 2 coins, 1 platform being ready, 2 coins, most of the operations in the coins are also conducted, crypto operations. What are we offering to the investors from TokenMatch? We are extending our coin discount, 25%. We are open for hybrid investment offers of coin and equity if the investment is sizable. There is also an early bird offer of InQcoin at 10% discount. InQcoin, by the way, we have already signed up 50% with some large investors. We are ourselves starting a digital VC firm mainly aimed at incubation, bringing blockchain on incubation. We're partnering with a South African digital venture capital firm to bring out the concept. So this is what it is, Molia Coin, InQcoin. I think 10-15 minutes is a little difficult for us to put in what we have learned in the last 3-4 years.
You still have 11 minutes left.
What part of the actual software platform? You've already raised some money, so what part of the software platform is actually built?
Well, the entire platform is built. The entire framework of the platform is built. Users can sign up, register, do a KYC.
Are customers using it?
There is a
you have customers?
Yes, we have paying customers, but very small. We did a POC in a small chapter in India to see how it works, and it was very good. And we realized that in order to be able to scale it to the next level, the kind of marketing and the sales efforts that's required is not possible in-house. So that's where we went in. We're not raising the money for building the platform. We're raising the money to expand.
And then where are you going to focus your main efforts? Are you going to focus in Asia? Are you going to try to focus in Africa? I saw the Africa, we get a bunch of coins there. Are you trying to focus in certain areas? Or are you going to try to do everything?
It's a global product. That's why the ask is a little larger. We realize that you can't do this sitting in one place. So it has to be based out of the US. We are winding down the operations in India, basing ourselves out of the US, Europe, Singapore, and of course India would actually come because of the numbers. There isn't much of a startup ecosystem there. The bulk is in Singapore, US.
Yes, they lead to
So they lead. So we naturally want to be near the horse's mouth.
What's the revenue model?
Okay. Premium users, subscriptions, transaction fees. That's for Molia Coin.
So give me an example of a subscription. Who would pay a subscription?
Well, there's a concept of incubation we are bringing in. An investor can run his secretariat on the platform. We do the deal-making process. So we charge, for network investors, we charge subscription fees, a yearly subscription fee for exposing them onto the validated startups. Startups are given a freemium model where they could get a little, quite a lot of services free, but there are extended services, premium services like valuation. Valuation of a startup. They can sign up to service cards.
What are the free services that are started with you guys?
Well, portfolio. We bring out a portfolio, a resume for a startup called portfolio. Portfolio is free. Interactions with the entire community is free. Staying on the platform is free for life. Services and concepts where we spend time cohort with other service providers are charged.
Those services, if they move past the premium model, do those happen through the Molia coin that they make those payments?
Earlier it was fiat, now it is Molia.
So to make sure I understand, you have 3 investment vehicles. You have Molia coin, you have the InQcoin, and then you also have equity.
We also have equity into Molia.
So equity into the parent, the for-profit.
The platform owner.
And then, so in terms of Molia coin, are you expecting the value of that token to go up? Is that why it's a speculative investment?
Well, yes, that is true. But we also have worked out on why the value will go up. The arrangement we have is, InQcoin, which is a traditional investment coin, would buy back all the Molia coins.
Over time?
Not over time. As soon as we raise the raise in the InQcoin is about 3 million. So we would buy back majority of the coins we have. Of Molia coin. That would hold, create a demand for and then when you give it as an incubation card, a portion of it is given as Molia coin. So there's a demand and supply in this.
So do you, with the Molia coin, how do you peg that price-wise? If I have a service, I want to charge in that coin, let's say that I want to charge essentially, $100 worth of services, and the price of the coin has gone up. How do you fix that? Am I charging in the coin, or am I adjusting my price based off the volatility of Mulia coin?
Yes, it's based on the adjustment of the volatility model.
So if people are then paying, they're paying essentially in a pegged fiat price.
Yes.
So why does the coin go up in value?
The coin goes up in value because there is a clamor for it from both sides. The investors are looking at buying up Mulia coin, so there's a shortage. There's only a fixed supply of coins.
Well, but it's essentially an infinite supply, right? Because people have to cash out of it.
Oh, well, we are buying back. The reason why we are buying back is so that it remains with us, with the investors, and they pass it on to the platform only as a transaction.
How do I
We
get
are not
out?
going to be listing the coin, Mulia coin.
How do I get out of the coin? So if I get paid in coin, I need to get out of it, right?
Well, we are figuring out whether we should bring in an exchange in there for liquidity reasons. But I think those strategies we are fine-tuning.
Well, when I get out, right? What's that?
You as an investor?
So I receive Mulia coin as a payment, right? I want to translate that into fiat,
Okay.
right? Which means I've reintroduced the coin back in, which has dropped the price, which means it's a closed loop. And as long as we're pegged to fiat, there's no reason for that token to go up.
Well, fiat would be discontinued once we fully go online with crypto. One. Second, we have done our economics in such a way that the demand will always be driven by the investors from InQcoin. So if you are paid in Mulia coin, your interest lies in staying on the system because we are offering lots of services. We are buying back from you. We would be the exchange. We have an exchange license.
But somebody eventually has to cash out.
Sorry?
Somebody eventually has to cash out of the coin.
That would be us. We would be paying it back because we are raising the money to buy back all our coins. Eventually, Mulia coin would be phased out.
What's the expected buyback point relative to the purchase point?
Well, I'll tell you why we thought like this. When we started our crypto operations, we wanted one single coin. But we figured out that investments, crowded by way of coins are not that legal. So we went STO. So over a period of 1 to 2 years, we would eventually phase out Mulia coin and only have InQcoin.
Of course, how much money, so someone invests and you buy back the coins, but the people that give you money will invest what's going to return what they get on that, and if you're paying a higher price.
We are assuring all the initial buyers of Mulia coin a fixed value of whatever is the base token value. There's a guarantee that it would be.
So are you trying to wipe out the Mulia coin completely?
Over the next 2 to 3 years.
But
We let the market decide how it.
Because every single company that has to be incubated, if they get paid, if they get funding in coin, they have to convert the coin to fiat in order to pay rent.
The Mulia coin is not an investment vehicle. Mulia coin is a transactional component for the ecosystem. The investment vehicle is InQcoin.
Right, but
so you would give
services,
InQcoin,
right? If I'm offering a service to that startup, right? Maybe I do, and whatever it is, like marketing, and so I get paid in coin.
Yes.
I have to cash out to pay rent. True. Right. So I have to get fiat.
You naturally go to the exchange. Yeah, I understand. You naturally go to the exchange, but we know for sure.
Who's buying on the other side?
Well, InQcoin
Using
is buying.
Ethereum is down a lot because so many people raised with the energy ERC20 and now they have to convert to fiat because they have to actually build a blockchain team.
The whole cycle, it's a cycle. We are buying it back. InQcoin is buying it back. Investors backing InQcoin are buying back.
But you can have a finite amount of funds to buy it back with, and what's the purpose of putting money in if you can just buy it back and not invest in things?
That's a good question. That's a good question. The initial investments of, the initial raise of 50 million we are doing is for the first set of 50 startups we want to invest in. But the cycle keeps meeting. There are fixed numbers of Mulia coin. So, but the investments are being raised. There are lots of VCs who want to subscribe to our incubation model. We haven't even touched them. This is just crypto proceeds. InQcoin raised proceeds which we are using back for investments. But then traditional investors and VCs like you would want to come into the system. So you would buy Mulia coin, or InQcoin, one of it. Typically InQcoin.
Can I just ask one other thing too? So that if I was putting a platform and putting the ecosystem in, I would imagine that if deals are going to get done, I would want automatically to get a piece of the deal without having to put up the money and invest in it just by providing the platform there. Is that anticipated? You automatically get a piece of the deal because you're offering the platform and you don't really have to put up money to do that. That would make more sense, right, than having to invest into the company.
I didn't get the question. I'm sorry.
So think about it, if you're putting an incubator platform up, you're talking about investing, raising money, putting money in each of the companies,
Right.
and then you mentioned about other VCs interested in investing as well.
Interested in investing via our model of Incucoin.
If you-
So they will have to sign up as subscriber. They will have to sign up
So,
as
but they-
subscription where we offer. We take. Let's
but they have
say
to go into your coin in order to invest in
I'll
those
tell you
companies.
how they go.
So you would invest, no VCs would go directly to the
I'll
companies.
tell you. I'll explain how they invest. So the first round of investment is for us to invest and incubate. Now let's say an investor like you wants to participate.
Right.
You have to bring your own security. Incucoin is a security-based, is a backed offer. So you would bring in your own security. You would say, I want to buy $25 million worth of Incucoins.
But
So
let's say,
we go to the regulator again, seek more additional, possibility to mint tokens, issue it to you, but you would be able to use it as a subscription service on the platform by paying as a small service fee.
no, I get that, but just hypothetically, it's part of an ecosystem. He's pitching a company to me. I'm an investor, and he's a company, and I like to invest in his company. You're saying I would have to buy coins and you would make the investment?
Yes, no, we would not make the investment, we would let you make the investment using the framework we have built.
That I got, and my question, if I invest, what are you getting? This is a subscription fee?
Yes.
But why wouldn't you just take equity by having the platform
Well,
introduced, or a piece of the deal, because then you would build up more value in your fund, and you don't have to put up money to do that, that's all I'm saying.
Well, the model of incubation we have thought out and designed is that just equity won't help. So we are taking a portion of equity, a revenue futures, IP, a lien on IP, and then bringing all of it onto a model so that the investor like you has more control.
So
on
you
the
already
governance and the
have a
processes.
deal set up with the company that's
Yes.
being
Prior.
it is
But
prior.
then you are taking something that you're exposing them anyway. The way I describe it is really you're cutting a deal with the company, putting it up, and if I invest, you already get a piece of that anyway. So you get the upsides. If I buy your token, then you have a deal across the board,
Right.
and I get upsides on all these companies that are in. That's what I want to know.
Quick question.
Thank you.
How
Well,
large?
we have time for one more question, and please go ahead.
How large of a registered community do you have now?
That's what I was going to ask.
But we started a POC operations in a small city in India called Hyderabad. We have about 6 or 7 startups we're incubating, very small operations. We just wanted to prove that if this works well, you can just multiply it. We have about 60 to 70 service providers, 10 to 12 investors, of which we are one. We also have an investment firm, and then we have lots of institutions and companies who want to entrepreneurship on our platform.
Total number of users.
Total number of users are about 300 to 400. We generated a revenue of about 250K in the first quarter we operated. We have gone slow because of the crypto operations. In India, you can't do crypto and continue to move side by side with traditional business. So we scaled down. We want to reinvent the whole thing. We didn't have any.
Now, when you said that it would be difficult to cover it in 25 minutes, you proved yourself absolutely right. So there will be plenty of time in the breaks. We appreciate the presentation. Thank you very much.
Sure.
So, all I ask you to look at is, are you interested in receiving more information from this project? There we go, couple more, we can bring in Aram. So, Aram is a marketplace, is a platform to launch dApps, to launch marketplaces, to launch the things that are needed in the blockchain. And Alex was with us in Barcelona. He did an amazing job there, and I'm looking forward to listening to his presentation one more time. Alex.
Good morning, everyone. My name is Alex Vandari, and I'm here to present Aram to you. Yeah, we would like to start with a very short video, if possible.
Okay.
Oh, the video first? Yeah, and then we can switch.
Very good.
Just to give you a gist of
So
what
this
it
is
about.
presentation number 3. We have one more, and then we'll have a break, and then we'll renew for the other 4.
If you make
cool dApps with blockchain technology based on the Ethereum protocol ERC20.
Let me get the big guy. We have time, sir.
Looks like it's Spanish. Can you please start from here?
Yes.
Aaron.
Hello. If you make cool dApps with blockchain technology based on the Ethereum protocol ERC20, then we have great news for you. But first, let's take a look at some of the current state of blockchain. At the moment, it's high transaction costs, no scalability, transactions pending for long periods of time, and other unpleasant things. Not to mention the constant network crashes. Doesn't look good, does it? But there is a solution. Let me introduce you to Aaron. Our protocol allows for dApps to be created on Ethereum, including games, social media resources, mobile payments platform, microloans, and anything else you can think of. For decentralized games, this means fast transactions when players buy or trade game equipment and unique digital assets, providing groundbreaking speeds for gambling dApps. For alternative decentralized social media platforms, this is the ideal tool for the use and monetization of digital services in decentralized social networks. You can make free actions like sharing or reviews and, when necessary, receive a fee for content and advertising, all without the cost of the transaction. For microloans, it is possible to quickly give out a loan without it being eaten by transaction costs. Of course, the increase in the number and quality of transactions in dApps will lead to an increase in the cost of dApp tokens using the Ethereum protocol. So don't waste your time with slow and scalable projects. Come join Ethereum. We also have cookies. Check out our website for more info.
That's a bit of British humor. Yeah, perfect. I would like to present to you Arum. Arum is a decentralized programmable platform to launch decentralized application for programmable finance for peer-to-peer economy. Basically, we're talking about third generation blockchain compatible with Ethereum, providing qualities necessary for fintech applications. Our team consists of 14 members. I'm CEO of the project. My career experience is in fintech, 18 years in fintech, being CEO and CTO of publicly traded Nasdaq-listed company here in the United States, was running operation, card payment operation in Finland, been in blockchain since 2012, we built some applications for Bitcoin early on, and been completely involved in this blockchain project since 2016. I founded a few other blockchain projects. I have an experienced team with key members listed here with large experience in their respective fields. So, what is our market? We focus primarily on fintech because we believe fintech is a market segment where blockchain can bring a real impact. The key areas listed here are valued more than $2 trillion, and most importantly, areas such as peer-to-peer payments, remittances, mobile payments, and rapidly growing fields such as peer-to-peer lending. Those areas are where blockchain can provide a tangible impact and facilitate these groundbreaking changes in the economy. There are certain challenges that existing blockchain protocols have, such as electric waste for proof of work system. Also, it results in low throughput. For proof of stake system, we have high fees and inflation in tokens, and pretty much all blockchain protocols and blockchain applications today suffer from very poor user experience. So our idea is that to get a real-world adoption for blockchain applications, we need to bring qualities very similar to those of traditional industries such as card payments. So transactions should bear no cost to user. They should be completed real time or nearly real time. System has to be scalable enough so you can launch dependable business on it. And our belief is that the only real case for high level of adoption is a public blockchain. It's public permissionless blockchain, not private blockchain. So I would like to introduce key properties of ARM, such as free transactions. So we built a model that allows to have transaction costs being subsidized by application operator. We have no token inflation. Ethereum has a two-level system where tokens are located on Ethereum and supply is final, so there is no any minting and there is no inflation in token. We have transaction time nearly real time, it's 5 seconds to produce a transaction. We are 100% Ethereum compatible, we maintain compatibility. It means zero development barrier, no development risk pretty much. It means you can take any application or develop application for Ethereum and you can run it on Ethereum, so there is no risk of doing something new that might not work. We already have software publicly available as late stage beta, pretty much in pre-production situation. We have developed software such as blockchain client, web wallets, mobile wallets for Android, Ethereum, Android and iPhone. We have features such as integrated name account, integrated atomic swap, allowing to basically trustlessly swap assets between different users. And we also have very key property that our partners and clients really love. We believe it's a key one, is decentralized cross-chain atomic swaps, allowing to transfer assets between different blockchain without any kind of central authority. And we have software such as blockchain integration toolkit, allowing anybody to easily integrate with their applications such as web pages or e-commerce applications with Ethereum. So Ethereum is based on consensus protocol we developed. This consensus protocol has several very key properties, such as it is based on delegated proof of stake, and it's using XRM, our token, on Ethereum mainnet. So the consensus and governance is based on Ethereum mainnet, not on Ethereum mainnet. So it's very much different from any other proof of stake blockchain protocol because it provides top level censorship resistant, because operators of the blockchain cannot influence any governance decision unlike any other proof of stake protocol. Also, we built a protocol in a way that it allows nearly unlimited scalability, solving a real use case blockchain problem. And so basically it means there can be a multiple unlimited number of delegates supporting Ethereum blockchain, and they can run multiple networks. So a few words about our performance. Basically, even a single network can provide performance 30 to 50 times faster than Ethereum mainnet. And with our scalability solution, there is no practical limit for throughput by creating several blockchains. So we're talking about, with reasonable 100 delegate strong consensus, we're talking about possibility of running 100,000 transactions per second on Ethereum. So what is a way members of society, of this community, can make any money with Ethereum? So we provide several key factors. How it can be done? Basically, key one is saving on transaction fees. So end users don't pay transaction fees, they're subsidized by application operators. And the way it works, application operators have stake in the system, and they receive block reward as part of the network functioning, and they can use newly minted coins to subsidize transactions. So basically it's pretty much free for them as well, and they also save on transaction costs. There are potential for there's a potential to generate revenue for liquidity providers, basically business operators that can transfer different tokens and cryptocurrency from one blockchain to another, facilitate as a gateway, and technology is already built for it. And basically, for any coin owner or token owner holding XRM, there is a possibility to have a revenue in different crypto coins, different coins on Aeron networks by simply staking token and doing nothing else and just get this revenue. The model is a little bit similar to what you may know from Neo blockchain. When you have a Neo token and you have a gas token, you being automatically generated, and you can actually sell this token on exchange if you don't need it. So that creates an additional revenue stream. Just a small comparison to other established systems. Aeron has outstanding performance. We provide this free cost of transaction to end user. We have very fast blocks, which means there are real-time transactions, and we believe our innovative governance and consensus protocol provide with a very high level of decentralization and censorship resistance. So our software is available in late beta stage. We plan to launch first production proof of concept network for our partners who are bringing their solutions on board of Aeron. We're currently working with several larger ones. And in December, and by late December, we plan to have this proof of concept production network operational, and mainnet will be launched in January. So that's a short snapshot where we're now. We successfully raised $1 million in seed financing. We developed basically a software to pre-production stage. We have XRM token being developed and launched on Ethereum blockchain. It's been audited by Cure53. It's one of the top white hat companies in the world, located in Berlin. We're good friends. And we have pre-approved XRM to be launched on several exchanges. And we enjoy strategic partnership with companies such as Crypto Global Capital, Staramba, Crowdbank, Veracity Protocol, and some others in negotiations. And currently, we have soft cap reached of $3 million. So, a little bit about fundraising structure, what we're talking about, and what we're offering to gentlemen later. We have our token, XRM, located on Ethereum mainnet. So the first offer is basically a utility token, and this token is necessary to power the network. There is no way around it, and it's not a security token. It has to be utility. It's one of those few real applications for utility token, actually. So what we're trying to do, or what we're doing here, we're raising up to $10 million, which is a hard cap, and soft cap is $3 million, through combined offering of utility token and through offering equity. Equity is the next stage. So what we will be doing, we have partnered with councils in the United States and in Canada. We are in the process of setting up an entity holding company in Canada, and this entity will hold 49% of operations company in Czech Republic. This is the company developer and the company that will provide operational services, and we will allocate 75% of all intellectual property rights to the holding company as well. We're actually applying for several provisional patents as well. And our offering will include private equity in this Canadian company with a very short road to actually to public offering. That's the reason we selected this route with Canadian company, because we believe it provides very cost-effective and really good time to market to actually go public. The reason for doing that, we believe the public blockchain services and public blockchain will benefit a lot from public participation. And the current situation is it's really difficult to place utility token into public hands because of uncertain regulation. But we believe by going public with operations company, we can distribute equity into public hands to people who are interested, and not only as a vehicle to profit from, but also to be a part of this community. What we are offering here, we're offering a discount of 30% as a base discount to TokenMatch participants, and we're open for negotiations for larger purchases on special conditions too. Just our roadmap, first part of the roadmap here. So basically, we are actually March 19th it would be private equity, and IPO will come later. And we plan actually to put our token on exchange in early January. That's all. Thank you very much, and I'm open for questions.
Thank you very much.
Okay, so you're looking to raise how much right now?
10 million.
Okay, for that 10 million, what's going to be the use of funds?
Oh, okay. Use of funds. Oh, it's not here. Okay. So we have it's in white paper and everywhere. But basically,
Do you want us to go to your website?
oh yeah, maybe
Yeah,
actually the
absolutely.
next idea is to show.
We're happy to do that. Go.
Just on me.
Yeah. Aram.io?
Aram.com.
.com.
And I'm sorry, so I don't miss it.
No, please. Great question. Great
Absolutely.
question. Absolutely.
Great.
Where should I find?
Yeah, just a little bit down. Just below it. Yeah, use of proceeds.
Okay.
So we allocate 40% to product development, protocol development. We believe it's necessary to allocate significant amount to education and to sponsor or support community to actually for participation, so to issue grants for outside developers. Our idea is within a reasonable time frame, around 2 years, to have the decentralized component of our offer, the protocol itself being completely handled by community. So we will be focusing on this company that we are starting. Basically, this company is something like Google Cloud or Amazon AWS or Microsoft Azure, basically a services company for end-to-end cloud, blockchain cloud service. The reason we are doing it is because once we start working with customers, and we have onboarded quite a few already, we realized they're not looking to do-it-yourself kits, blockchain, like pretty much everybody's providing, so you have to train people, and there is very difficult situation to find qualified resources, but in the end, those companies, real business, looking to actually execute their own business model, not to double with blockchain and learn how to operate it. So they are coming to us and they said, look, we love your solution, but can you run it for us? You know, as on SLA based, right? So we realized we need to cater to this demand if we want to see real business adoption going. And the only way to do it is just to launch an operations company. So we have two kind of distinctively different parts of this offering. We have the centralized component, which is a protocol itself, and we have a centralized services company we're building to provide business-to-business services to get those businesses, to get adoption going, and their users that come on board with them will be using this decentralized platform.
But I have two questions. One, is this an Ethereum derivative or is it all new code base?
Excellent question, thank you. So it's based on Ethereum because we deliberately selected what we think is the best platform in terms of being proven and stable. What we developed our own peer-to-peer protocol and our own consensus. We are working on further performance increases, but we committed to maintain full compatibility with Ethereum and basically support Ethereum virtual machine in perpetuity.
The second question is mainly on your on-ramp. I mean, who's going to be the initial adapters? I mean, you know, because if you're broad, it's difficult to get broad adoption.
Yeah.
There must be a focus point.
Yeah, absolutely. That's why.
Yeah, who's your focus base?
Absolutely.
With that?
So our focus is on fintech applications, because first of all, we believe this is where it makes the biggest impact. It just enables things not possible before, such as peer-to-peer lending, or possible but really hampered by fees in ineffective systems. And another reason is our team is mostly from fintech. We know the demands of the industry, we know what is going on, and we believe this is where we can bring value as developers, as a company. So that's why we're focusing on fintech, but we're currently already building a clients portfolio. So the biggest one we have is this Taramba company from Berlin. It's actually listed on Frankfurt Stock Exchange, and they also completed ICO for 35 million. They have over 100 employees. They're more than 4 years in the market. It's actually virtual reality, extremely realistic virtual reality, focusing on the celebrities and fan base. Basically, they have like really high level supporters such as Paris Hilton, Messi, a lot of football fans. So what they are doing like avatars, absolutely stunningly realistic avatars powered by AI and fed by information from actual person they created avatars from, and those avatars are licensed. And the way their economic model works, and this is where blockchain comes in, they do micropayments every time fan interacts with the star, and star receives a commission. So everything goes through blockchain, but it would be disaster for them to try to do it on Ethereum, cost-wise, speed-wise, and also bottleneck. You're trying to do something and talk about, sorry, Ethereum is overloaded, there is a new kitty on the market, you cannot talk to your fan, please wait 2 days. It's disaster. You cannot get any adoption. So we are talking to them, and we already signed an agreement. We did a presentation for them in Berlin last week, and they totally love our solution. And what we're going to do, we're going to offer them a full service package like I described. And we have some other company. We are working on proof of concept with a company called Ethereum. It's basically a prediction market company. Let's put it this way, but they have 10,000 actually clients already. So once they have a proof of concept, they're going to bring this population of clients on platform. We're also working with Veracity protocol, which is IoT solution for real-world object identification. They're also like 3 or 4 years on the market, and they also need this kind of platform. So we are in talks with many. What we need to do now, we feel it's a great time to capture the market because the niche is huge. There is a potential to build in 3 to 5 years a unicorn company in this field. Because market is growing, and while everybody's so stressed about losses in cryptocurrency portfolio, it's time to build, and we believe we're in a perfect position to build, and we offer you opportunity to join us.
Question about that?
Yeah.
Jumping in. So are you allowing U.S. investors?
So what we do, we don't allow U.S. retail investors, but we are working with institutional investors.
So you're selling a security?
We are not selling security yet. We will register, but what we do, we are offering a utility token, and we're applying for Regulation D as well.
A utility token doesn't exist.
Yeah.
There is no such thing.
Yeah.
So unless you've got something that's not up there, you're selling a security.
Yeah, we are applying for Regulation D for US.
So Reg D, Reg S?
Reg D, 5 or 6 C, I think.
And so that can't then get listed on an exchange?
Well, I'm not really qualified to answer this question. It's something I can find out with our legal team and get back to you.
If we would talk about more, I can tell you
Absolutely.
can't, at least as it stands now, which is going to be an issue because then you can't give it to validators. So as it stands now, I mean, unless there's something going on that's not up there, you're not going to be able to actually do all those rewards because it's a security.
Well, from crowd sale point of view, we don't allow US investors.
It doesn't. That's irrelevant. It's a security, and if you have U.S. I mean, if you put it on an exchange, the exchange gets to U.S. investors, you're still in violation. So I would highly recommend getting some legal counsel to solve that. So like if you're doing
we're working on it.
if you're doing the 506, the SEC is not going to care that you're making that distinction. So that's one question I had. The second question I had is around the proof of stake. Do you guys have a solution, given you're going after fintech, do you have a solution for the economic scalability issue where, you know, let's say somebody comes on board, they want to do a $20 billion project, you're worth $4 billion, you can't work with them?
It doesn't really matter what kind of size of their project is. The way it works, we don't have a limit on number of these delegates, economic participants in the system, so it's unlimited. And the way it works is, we call it implementation of liquid democracy. So every delegate, no matter how many voting power they have, as long as it's above minimum, have the same voting rights in any other. And all delegates are not anonymous. They are actually business ventures, but they are authorized by other delegates. So it's like self-regulating body. That's the way it works.
Somewhat similar to Stellar in terms of their trust of each other?
Maybe. I'm not sure. It's very similar, but probably in the same direction. So the way we see it, it should be done in a way that it minimizes network abuse by somebody accumulating too much voting power. And we created an economic incentive for people not to stake everything on one delegate, because more tokens are staked in a single delegate, the less percentage of block rewards they will receive. So there is economic disincentive to stake over minimum. So you only need to stake minimum, and you're in a better position to stake with somebody else too. And that forces number of delegates to grow, which provides with higher security level for the whole network and higher level of scalability too, because more delegates you have, the more scalable network becomes, because each delegate can support from one to many networks. So that's how we work, and we built and completing interoperability protocol that allows to transfer assets between different networks. That's the key of power of.
Well, we only have 20 more seconds. Alex, thank you very much for your presentation. And we're going to go and vote now. Thank you very much.
Thank you.
Well done. Thanks. So, whether you agree or disagree, I mean, these are, these last two projects, nothing to take away from Lube, which was a more informal one. But these are huge plays, whether they actually accomplish or not. I think that when you see, did everybody vote? Yeah. When you see, this is a serious developer with some serious ideas, challenging at a time when there can be these startups that can challenging.
Do you know where their developer base is?
I do not. Yeah. But I would guess that it's Finland. Yeah. Gentlemen. We have play number 4, and that is no hazing. We have, should have been prepared. Sorry, guys. We have Michael and Ivan here to present. You have 25 minutes. So there's a thesis that says that centralized cloud cannot forever continue to grow because there just isn't enough computing power and land and energy to do that. And these guys buy into that thesis and believe that decentralization for the cloud service providers is the future. And without further ado, come on. Thank you. Alberto, why don't you get some of the people outside to come back in? And we'll get you 25 minutes.
Should we hold for a few minutes?
Yeah.
Stretch. Because we've been stretching like for the past 5 minutes outside.
Tell us about yourselves. How did you get into the field? Where do you come from? Tell us a little bit about that.
Sure. So I was a cloud strategist at Microsoft. I worked with government agencies focusing on cloud security. So big, strong background in cloud, working with cloud partners, networks, and we have fantastic engineers on our team as well, including Idan here. Can you speak a little bit about yourself as well?
Yeah, sure. So my first company was API Graphics, so later on became A&D. You'll hear later in our presentation where I guess one of our major stack is hardware. So we have a partner team which essentially or people are leaving, or a sister company of ours forming a team. They have done 20 years of design in API graphics. They're coming out to do ASICs for us. Essentially, that's the hardware stack. And I work in Microsoft to do Xbox manufacturing. So I did that for 3 years, 3 to 4 years doing, and in Asia, manufacturing for high volume manufacturing, because hopefully we go high volume manufacturing on the hardware layer. And I did 8 years at the Cisco's doing supply management.
Yeah, if I added all that up, you must be 65 years old.
Not quite.
8 years and 8 years and 8 years. Come on, I can't.
38.
Oh, sorry. Okay, I'll reel them in. Why don't you get
great,
started?
great.
Okay. Sorry, I'll work on it.
Sure. Go to start? Yeah. Let's go. All right. Hello, everybody. My name is Michael Bazzi. I'm the co-founder of Nodehaven, and with me is our Director of Operations, Aidon Liu. We are building a secure, intelligent supercloud, where essentially our vision is to build a decentralized cloud marketplace with specialized hardware that is focused on security. Thanks so much. Quickly touching on our product stack, Nodehaven is vertically integrated across the 3 core pillars of cloud. That includes infrastructure as a service, platform as a service, and software as a service. We address these through the Haven Marketplace, which is a marketplace of all the software as a service solutions, the applications that enterprises use. The Haven Network, which is a decentralized, intelligent network of data centers that operate in a competitive environment. And Haven Hardware. We have our own in-house hardware development utilizing a new architecture called Gen Z, which we have a slide dedicated to, so we'll touch on it soon. Ultimately, what we're doing is blending the worlds of blockchain, cryptocurrencies, and decentralization with the ginormous cloud industry. Now, the way we're doing that is, just for some context here, if we look at crypto mining today, miners around the entire globe have existing infrastructure that can scale upwards of a gigawatt of power each. Now, they have to compete consistently on attaining the lowest electricity costs in the world, the most efficient hardware, and again, these hyperscale facilities. So I'm sure we've all heard about the power consumption that Bitcoin mining uses, how much energy waste as it's seen in articles. Now, when we took a look at the numbers, we saw that crypto mining as a whole makes up for more power usage and power capacity than the cloud industry. That all of that competition and all of that power capacity is only competing over what is $6 billion in the past year for mined coins in revenue. Actually less now because of the market downturn. Whereas cloud, using less than half of the power capacity, was able to generate over $150 billion in the past year. So what Nodehaven does is creates a marketplace similar to Airbnb, but for these data centers and hardware owners and miners to compete on performance and cost. And through doing that, we're effectively accomplishing 2 things. One, enterprises get to take advantage of the market and cost efficiencies of decentralized competition, which is the things I talked about, the cheapest electricity in the world, the most efficient hardware, and so on. And then secondly, miners benefit as well because they get to utilize their existing infrastructure for additional revenue streams that's insulated from crypto market fluctuations.
Let me interrupt you because you had 3 people walk into the room. So just to summarize, total mining globally, 6 billion in revenue, correct. Total cloud over 100 billion,
150 billion.
150 billion. So miners are applying the resources in the wrong place. They should be in the cloud environment, right?
Right. That's the thesis. Right. It's an additional stream for
okay. Yep. Sorry for interrupting, but for the people that just walked in, that's the thesis.
Thank you. I appreciate it. Correct. Yep. So we're blending those together, blockchain and cloud. Now, if we take a look at the competitive landscape, we have Microsoft, Amazon, and Google, which are the big 3 of the traditional cloud industry. On the right side, we have a few decentralized players like Golem, Sonam, and Ethereum. Now, Nodehaven is the only decentralized network that's bringing the benefits of blockchain and decentralization to the cloud while also retaining enterprise-level security and compatibility with existing applications. I'll touch on what both of those means. As far as enterprise-level security is concerned, what Golem and Sonam and others are saying is essentially, hey, we're going to allow you to connect your computer that you have at home to our network to serve cloud services. But if you really think about it, we don't foresee being able to go to an enterprise and tell them, hey, we're going to run all your customers' data and your critical applications through, Joe's computer in his basement. It's not going to fly. Whereas Nodehaven, we're able to go to that same enterprise and say, we're going to run your customers' data and your critical applications on Gen Z cutting-edge hardware that's run in data centers that we track performance metrics on, things like uptime, bandwidth, latency, all of that. So that way we can uphold service level agreements and any certifications that you may require because of regulatory agencies. So that's a completely different pitch and instills more confidence in the enterprise, the security that they expect. And then the other piece, the compatibility, blockchain is great for a lot of things. I think we all know that, but it's also inefficient for certain things. So if you try to build an entire cloud platform on a blockchain, what you're requiring is that all the existing applications have to be redeveloped to work with your platform. So you're excluding the entire market that makes up the 150 billion. So Nodehaven operates on a hybrid approach to where we still have blockchain offerings, we still have decentralized storage. However, we allow for all those existing applications to deploy and run on our network, which is a huge advantage for us. So we're serving the world today as well as scaling with the Web 3.0 and blockchain in the future.
So I'm going to take a quick just recap again because I know some of you guys came in after. These are existing decentralized applications that provide GPU, storage, etc. Essentially, what we're doing is combining the two with like a platform. You can consider like Airbnb or Uber, but for cloud services. We're commoditizing using either of these services to be able to provide a wider range of pretty much compute resources. And as we mentioned earlier, there is that impending data boom, which is if you want to do autonomous driving, you cannot wait for your vehicle to go ping Google's data center to get back your data. So you really need this infrastructure of having compute power across the board.
So yeah, we should just explain a bit about those. If I understand correctly, what you're saying is that you're effectively using established data centers to provide cloud services through a network offering in a way that peer-to-peer cloud services can't do. They don't give you the security and all the latency and all of those attributes. Where do you source these networks from these cloud providers from? Do they fall in the sort of Microsoft?
So I can take a quick stab at it. So first thing is we're providing the three layer, the hardware stack. So essentially today's miner, they have very efficient power now. So they can migrate into converting some of the existing hardware plus new one to become a supercomputer to play in the cloud space. So we're enabling literally miners to not only just mine, we already have a facility, be able to participate in this cloud space. So all of a sudden, not just Google or Amazon having the cloud services, all these other guys can also compete in that marketplace and provide the services.
So you're essentially converting miners into cloud providers by providing them with hardware.
Exactly. Right, and we provide the marketplace for it as well, so that's why all three there.
And just to add to that, we also allow for traditional data centers to join the network as well. It's not just the miners, however, we do allow for that adaptation of the existing infrastructure that crypto miners have to serve the cloud as well. Another quick question?
Back to the tokenomics, will you be charging a token to access the network or not?
We have a slide on that, so we'll get to it shortly. So very quickly, I mentioned Gen Z before. Gen Z is a new architecture that's being built by a consortium of leading computer industry companies, including Dell, HP, VMware, and so on. Some of them are listed here at the bottom of the slide. Nodehaven is proudly a member of this consortium, and we're leveraging the Gen Z architecture to build what are called application-specific clouds that are capable of extreme performance gains versus today's market standard technology.
So to give a little bit more background about Gen Z, so in 2017, U.S. government spent $258 million to promote an exascale computer. So a computer capable of processing billion of calculation per second. So that was a project, and essentially the outcome of it was this Gen Z architecture. And what Nodehaven does is we actually provide a critical piece of this, providing the memory piece architecture that will play with HPE's CPU. Other players are playing in other memory like DDR, but we're also providing advanced architecture with something only we're able to provide because of the silicon team that's on us.
Question on that, because you guys are part of that consortium,
yes.
Does that allow you access or get you sort of earlier usage of the Gen Z platform? What are the advantages of being a connected source?
Yeah, so I'll try to take a stab at it. So first of all, we definitely have access during the development of the protocol of where it is going. So then we know, so we are already working on our silicon team to develop towards that protocol. Secondly, we are tied with this industry partner. There's a few key players that's providing IPs today. Intelliprop is one, PLDA is the other company that provides IP. So we are working with them ahead of time to be able to use their IP once it's ready to deploy at the same time. So it's really a time to market piece. But the third piece is obviously we're providing all secret sauce, which is a memory. We're actually taking graphics memory and making that into our advanced memory architecture to play in that ecosystem as partners with these parts.
So a really good way to touch on what the memory piece really means is, if you look at today's model, AWS, Microsoft Azure, and Google Cloud are really tied to the CPU. They're very CPU based, and the Intel Xeon processor is what dominates the market today. Now what Gen Z allows is having everything be memory based, which essentially allows a shared pool of memory between multiple processors. But what we're doing is taking it to the next level. We are bringing ASICs, which are application specific. A really easy way to think about it is a CPU is good for general processing of many tasks, whereas an ASIC is application specific and can do one thing extremely well. So what we're doing with Gen Z is building out these application specific clouds using ASICs for specific tasks like video transcoding or database processing or even AI. And then an enterprise can leverage all of these different application specific clouds and have a shared pool of memory, basically creating a supercomputer with those application specific clouds. Does that make sense?
Yeah. Are those application specific clouds like containerize, like .NET?
Yeah, essentially, it's virtualizing those ASICs to be used in the cloud.
Let's take another question.
Sure. Yeah, really quick question. Do you have a proprietary memory technology for the platform?
Yes, yeah, exactly. So the team that the GDDR, what we're building is the GDDR6. It's an industry consortium pattern, and the team that we have been working with, they have developed the prior few generation. They left one of these companies and they formed a team to provide this IP in general to AI. AI is one big industry that they're targeting. Cloud is another one, and essentially we are working with them directly so that essentially they're part of the team, which means we are the IP provider for this. So it's a kind of
contract with them.
Exactly.
Yes, exactly. They are a sister company to us. They hold 10 patents in semiconductor design. They're minimally a year. We're working to extend that out to potentially bring them into the name as well, but we do have the exclusive rights.
Yeah, and I just want to mention, because it's actually a relationship we have built almost for the past 20 years, because I used to work in the same team, so that's why it's a close relationship.
Very close personal friends.
Yeah, personal relationship that built out.
So touching on the market yearly revenue, Gartner, which is a global leading research and advisory firm, forecasts a $192 billion market yearly revenue, not market itself, but the actual revenue for 2020, with an average growth rate of 25% across the three core pillars of cloud that I mentioned before, the infrastructure, platform, and software as a service. And again, we are integrated across all three of those. Now, if we take the $192 billion figure and the 25% year-over-year growth, and we extend that out to 2023, we're looking at around $375 billion in revenue that year. Now, if we target a conservative 2% market share in 2023, we're looking at $7.5 billion in revenue for Node Haven, and that revenue goes through the Node token as well.
So let me add something. So we look at this as a very conservative market share in 2023. 2023. Right, so the way that I kind of look at this is, even if we look at this today, the hardware itself, so we're building a hardware layer, which will be a critical piece of future of cloud. We can retouch on the ASIC cloud later. Second piece, we're providing intelligent network, which enables all this. And thirdly is the platform of Airbnb or Uber. But if you look at how Airbnb and Uber disrupted the current ecosystem, their current ecosystem, so perceivably within 3 years, the platform for cloud would be able to take off, and this we can, I think, on a more optimistic perspective, maybe even 20 or above % market share if the platform could take off.
You guys got 1% of the current mining compute. You'd be able to service that 2% mark, is that right? It's 2 to 1, twice as much.
Roughly,
yes,
right.
yes. correct?
Now, I guess to kind of set the stage as well for this kind of decentralized competition, one thing that I want to mention is just to give some ideas of what this is capable of. If you introduce decentralized competition to a market, you're bringing hyper-scalability and market dominance. I'll give two quick examples. One, if you look at Bitcoin on the crypto mining side, Bitcoin was able to quickly scale to be 40 times more powerful than the top 500 supercomputers in the world combined. Now that's extremely efficient, and it was able to do that in part from the step changes up to an ASIC, which we're using for cloud. On the more traditional side, if we think about shared economies with Uber and Airbnb, Uber was able to become the largest taxi cab service, as we all know, but they don't own any taxis. Same with Airbnb, taking away market share from hotel and lodging, but they don't own any real estate. In the same fashion, Nodehaven is going to be building a secure, intelligent supercloud, but not own any data centers. And then we all saw how that played out for these companies as well.
So that is what you're saying essentially, that you are bringing decentralization to Gen Z, or is Gen Z already, are other participants in that consortium working towards decentralization? You are bringing this three-tier component to it with a platform layer on top, which brings.
Yes, so let me try to emphasize.
Really quickly, I just want to give a short answer and you can expand on it. The Gen Z itself is not decentralized, it's an architecture to build hardware on. But through our node tokens and what we're doing, we're dispersing access to that to the members in our network.
So most of the consortium members who are using Gen Z are deploying in a centralized
Exactly.
plans also.
Exactly, and each member in the consortium has a specific plan on what they want to do with the Gen Z. Nobody's doing what we're doing. We identified a specific point with the Gen Z consortium that, hey, this is our value that we can come in, and we identified that gap, and that's what we're bringing to the table. To the point where we're also working with other companies such as Dell to expand on our offering as well.
Okay, so I think I need to touch on Gen Z one more time. So Gen Z is a protocol. Like today, you guys are familiar with virtual machines. Take one machine, you can make many different virtual machines. But Gen Z essentially bring virtual machine to the hardware level, which means you have many hardware. I can be running a mining facility with lots of GPU cards. I can combine all those cards into one supercomputer because they all go through a common secure protocol. So that is Gen Z, and we're participating in that architecture. But the power of that is because Gen Z bring all the members to a single pool. One more, I can recite what he said is, traditionally CPU can do many different applications.
General.
Then you have a general application. Then now you have ASIC that does specific things like Bitcoin mining, AI chips only, database processing. So you have all this ASIC that's 100 to 1,000 times faster versus general computer. But now imagine all of them uses a single memory pool. Okay, so look at autonomous driving. You need sensors, you need database, you need video encoding. Now, they need to send data to each other. If all of them just share the same memory pool, then you are 8,000 times faster. So now, imagine all your ASICs is all specific. Shared memory. You are doing exactly what a CPU does. You have all this ASIC cloud sharing a common memory pool. So you have 8,000x. That's where the 8,000x come from.
And I do want to say that the Gen Z is not conceptual. It's actually in practice. This is what they found through research.
Yeah, and in Supercomputer 18 this year, the HP presented the CPU architecture for that.
And is your platform play, does it then therefore integrate all the different ASICs into services that can be consumed by applications that are being built and then on top of that?
Yeah, and I think we got that.
Yeah,
all the stuff. So let's.
It's basically click to run.
We got 7 minutes, so let's. Did you skip 2 slides or this one?
Oh, yeah, thank you. Yeah, appreciate it. All right, so here's an overview of the market strategy. It does get more granular than this, but this is a high-level overview. Number one, we tap into existing cloud partner networks. We get to leverage them for tasks like migration, deployment, onboarding, really all the solutions that have been built out by many companies to serve this $150 billion market this year. We're able to leverage them to scale quickly without us having to do these tasks. Number two is intelligent provisioning, which is basically a fancy term to mean that anytime a request comes to our platform, we're able to route it to the highest performing provider at the lowest cost, guaranteeing a cost-efficient cloud environment for enterprises.
So I'm going to add 2 pieces right here. So firstly, we have 3% of our team which have a cloud strategist which have at least 20 years of experience. One, deploying cloud data center. Second, working with a cloud partner network. So these will be existing contact connection that we have with these cloud network because we have strategists on the team. Secondly, intelligent provision. This is actually a very critical piece. It actually takes years of research. Our researchers date back with researchers on our team that goes all the way back to 2012. Because in order to enable intelligent network, so we have like one of our let's say IP is essentially is how do you do a proximity aware matchmaking, which means I have a processor here, I need processing here. How do I know who's around? Can I use their processing? So that requires research paper and having that into programmable codes. So in our resources, we have pretty much 80% of that already built out and on a testable network that we can deploy. So that's kind of like a secret sauce piece that we're able to bring in that make us very unique to be able to execute on this.
All right, and then following from that, number 3 is what I touched on before. I want to highlight it again. The integration with existing applications being interoperable, so all of those solutions can be deployed to the Haven network. And then something unique to us on the traditional side is the token incentive that we have. Node tokens emulate that competitive model that we see in crypto mining and Bitcoin, and we're applying that model over to the cloud. Now, node tokens are the core of our platform. Node tokens are used to redeem cloud services, and every transaction goes through the node token. However, we do allow enterprises to pay with fiat, their native currency. They're done, they can pay, their services are rendered, and then internally we handle the exchange to node tokens, which then renders the services. Yeah, so as far as adoption is concerned, we allocate half of the total node token supply to adoption, which gives us 2 main benefits. 1, we get to incentivize miners to join the network, and 2, we get to subsidize enterprises to get them to join the network and accelerate growth that way. And then what's unique about these tokens is that they are essentially commoditizing cloud services. And what that means is that as more cloud services are rendered and the platform is growing to be very successful, the token value will increase. And because we have this adoption pool of tokens there, it gets to grow in value, which allows us to continually onboard enterprises as the years go on. Now, we believe that we will hit critical mass to where network effects should take hold, making the platform self-sufficient with enterprises and miners both joining into the network.
So I want to talk a little bit about adoption because I think the market is going to that direction, and within a year or two of us, we're building this network app. There is a real need, or that's why Microsoft and Google is going out building a lot of data center of our architecture, because you have autonomous driving, which you need all this power. You have AR and VR, so virtual reality, and but beyond to AR, augmented reality, everything in this room. So you need a lot of processing power. You have all these IoT devices. You have real-time video search, being able to do surveillance real-time. All this will require a lot of localized power, localized processing power. So cloud today, you cannot wait for all this stuff to send all the way to your data center and come back. So that's why you need kind of the all-layer, the entire spectrum of your home miner, your laptop, your cell phone, plus the Google data center in the best matchmaking scenario in order for you to execute and deliver to this technology need.
Okay. So as far as our revenue model, we take a 10% commission from 3 main buckets. We have our hardware piece, to where if you own the node token, you get access to our hardware developments at only a 10% markup from cost. And if you do not own node tokens, you can still access our hardware, but you're going to be paying market price. So really driving in value into the token there. Number 2 is the marketplace, where we take a 10% commission on every transaction there. And lastly is our data intelligence bucket. So it's really important to us to make sure that all participants and users of the Haven network own their own data, they own their own identity, and privacy is truly a staple in what we're doing. So, Google and Facebook are notorious for monetizing user data and not supplying any of that revenue to the users. So what Haven does is, with consent, we will monetize your data for you, supply the revenue to you, and out of that total bucket, we take 10%.
So I just want to add on again why all the 10% is because all the value of the entire cloud stack, all this innovation, is going into the value of the token.
So some validation, we're building that data center partner network that I mentioned before. We have 400 megawatts of capacity available and ready for the network in 3 continents. We have Atlanta, Georgia, here in the US, Sweden, and Japan, and all the other dots are what we envision having, which is providers anywhere for any enterprise.
And part of these are major player that actually is seeded or existing private sales.
And as far as our core competencies for our team, we have everything from hardware engineering all the way to the business development strategy side. At the bottom are companies that our team has had experience at. I myself was a cloud strategist at Microsoft with government agencies, where I spent a lot of my time focusing on cloud security. And if you would like to touch on.
So my first company was ATI, so that was 20 years ago. So this is where I graduated. Most of my friends, they stayed there. They formed a new company, now a sister company. So that's the background of ATI graphics. Then I went to do Microsoft for manufacturing for Xbox 360 in Asia, high volume manufacturing, Foxconn, Electronics, Celestica. I pretty much have tried, managed all of it. Then I did 8 years at Cisco, still doing manufacturing as well as supplier management for silicon ecosystem.
And you still claim to be only 38, right?
And then very quickly,
when he was 5.
Exactly. So to touch on our token economics, we are raising $97.5 million. 93% of those funds go directly to our product development vehicle, which is for things like hardware engineering and manufacturing, as well as platform development and so on. Now, our private sale consists of 5% of the token supply. The price is 10 cents per token, up to the very first 2.5 million. We do have soft commitments for that full amount, but it is first come, first serve with hard commitments. Following that, our public sale immediately jumps up to 70 cents. And each one of these 4 public sales has 5% of the token supply allocated. So as soon as we sell out of those 5%, it moves on to the next price. And the reason why there's such a significant discount in the private sales is because we're really looking for people who can also bring value to our project and not just capital. So,
question. I didn't jump the gun here.
Sure.
I love all of this, but I don't understand why you have a token.
Yeah, sure. So I'll touch on it really quickly. So with the no token, we're able to bring in many aspects of the decentralized competition. So one, we get to incentivize miners to come in and bring in the decentralized competition that is going to be paid. There's a couple more points that you might resonate with.
Well, I think miners want to compete for tokens.
Yeah.
And by providing that, instead of you getting you can get these tokens as you were to deploy your services. They want to move from the current mining, that mentality of getting Bitcoin, all of a sudden I can get all these no token, and I can redeploy them for different services.
This is a security token offering.
It is a security token offering, Reg D in the United States, Reg S outside of the US.
This is a standard token where you earn fees.
It is not. It's basically rewarding miners or providers, really, we can call them, on the network. But to get back to that, another point is that when we have the token, we really believe in this cooperative, decentralized era. And when we have this token, we're able to disperse the benefits of our company to the holders of the tokens. If you think about Uber as an example, who made Uber successful? It's really the initial drivers in that platform who made it successful. Now imagine if these initial drivers were actually able to buy into the company or hold something of value that grows alongside the company. They'd be very well off right now. So we believe in a cooperative era where the people who really help build our company get rewarded, and that's reflected in the token. They're able to buy into the system as well.
So are these like incentive stock options that will be taxed because they're income?
Well, so we'll touch more on that after. We can take that offline as far as the structuring of that. Yeah, but essentially it's dispersing. It's the dispersing benefits. It's the incentivization and bringing that decentralized competition in.
All right, yeah, we should talk more about it.
Sure, yeah, absolutely.
Yeah, I'd love to.
So we have a break right now. I think another quality team, great presentation, well thought of, clarity came through, and let's take a break, and we'll call you guys in a minute. Yeah, let's go. Thank you. What? Sorry. Thank you, Elizabeth.
Yeah. Ready.
Ready?
Let's do it.
Okay, let's do it. Missing number 1. There you go. Number 3. 8. Okay. Thank you very much. Let's take a break.
Everything else.
Thank you.
It's a great use case for it. Yes. I agree. It becomes really interesting. I love the request about marketing. Great. Maybe that you was security. There are, so that's absolutely true, so there's, exchanges that are approved for security institute, it's like a pink sheet market, right? It's like an over-the-counter market. It's not really a liquid market. And the question is too, do you want your, would you really want your venture token to be a really liquid token? That's the other thing. What is the efficiency? So what is the risk of having price involved, the volatility could not be, may not be associated to the fundamentals. And in some ways that can be a positive thing, kind of trades at like 3 different times.
A ver, ¿a qué hora tenemos la agenda?
So what we're trying to figure out is an option for pension funds, also investors, It's a reallocation effort. It's not really a.
Exactly.
But yeah, that's what we need.